back. Let's talk about the markets, the way forward. And let me invite on the show Mrinal Singh, the CEO and CIO of InCred AMC, to discuss the market fundamentals. He leads the Emerging Business Fund, A Category 3 AIF at InCred. Mrinal, thank you very much for joining in. I was just looking at your fund, the fact sheet for September 2023, and this is the Emerging Business Fund, Category A. You're sitting on cash of 23%. Can you explain that a little bit?
Yeah, well, so a couple of functions. One, there have been some inflows in the fund that got us there. Plus, we had booked some profits and we had been waiting for some interesting prices for us to deploy cash. So that cash is a tactical call that existed. And as the market has moved down for a variety of macro reasons, we've kind of deployed some bit of that cash as well.
So just a quick follow-up. Towards the end of September, when you did book profits, can you tell us the pockets where you booked profit? And in October, as you started deploying the money at lower levels, which were the themes that you bought?
So I mean, it's more to do with stock-specific movements. So we had taken money off in some bit of industrials and some bit of other stocks and sectors. But so we don't basically get specific into stocks, but we relinquished some couple of names. So we took those gains away. And the markets of late have been weak, which gave us, again, interesting points to enter. So we've moved money in, particularly into areas which are more rural-facing and domestic economy-oriented.
But even industrials is domestic economy-facing, right? But you've booked profits in industrials. So when you say
one of the names.
Yeah.
One of the names.
So what are the other themes where you bought into, which fall under this domestic economy facing?
So besides manufacturing, which is also domestic capex oriented, we also have of late bought into technology now. That's more to do with exports, but prices have gotten interesting in that space. On the domestic side, we kind of like rural facing businesses, two-wheelers, auto ancillaries. Those kind of names have been of interest to us. So we continue to pick on them.
Okay. Mrinal, hi. Good morning. A large part of the fund, this Emerging Business Fund, is investing in the auto space, autos, auto ancillaries. What exactly are you sort of picking up there? Of course, we know that car sales, SUV sales, all of that has gone through the roof. So are you simply sort of backing on that consumer demand sustaining? And how do you find valuations overall? What would you rather buy if you were to put fresh money to work in autos? Would you do that? And what would you buy?
So very interesting question. So we bifurcate auto into 2-3 areas. One is the four-wheelers and another is two-wheelers. And there is a very large ecosystem of auto ancillaries in picture. Some bit of auto ancillaries actually feed into both four-wheeler and two-wheeler ecosystem. I think the two-wheeler ecosystem has been languishing for 2-3 years. And there have been some green shoots of some volume pickup there. So that's interestingly priced. So the entire supply chain in the two-wheeler ecosystem is of interest to us. And the valuations are comfortable. In four-wheeler ecosystem, we've stuck to largely select auto names. That's not to do with the SUV sales that have been picking up. That's not necessarily that, but more into zones which are, lower ticket four-wheelers and some bit of supply chain in that space as well.
Okay, got that. Mrinal, it's good to have you on the show. I think this is the first time we're speaking to you, so thanks for joining us. You do have around 62% in the small cap, so I just want to get your sense of how you're looking at the entire pack after the, kind of fall that we saw over the past few days. Do you think that we're set for a much sharper correction? And, when that does come through, are you looking to deploy a lot of more cash over here? Or do you think you'd be more comfortable now maybe moving to the large caps?
So very interesting. That number that you quoted, 62, has been a function of our last year's small cap investing having done well. But then incrementally, we won't decide our investment allocations or decisions just because the market cap is large or small. But interestingly, when we go down the market caps, our return expectations go higher because there is a lot of liquidity that comes into picture. And we do want superior return. So if I have to choose, incremental deployments, That would largely be in a bit of largish market cap, but then it's not to say that there is nothing available in small cap at all. There are select names that are of interest. Obviously, the recent volatility have created some more interesting data points for entry. So we continue to nibble. But that's a larger approach to this fund in particular has been on a flexi cap mandate. It just happens to be that at current phase, we do see more small cap or mid cap allocation, but that's not, that's an outcome of how we've gone about choosing stocks rather than having a predetermined number in mind in terms of allocating money to that market cap.
Okay, got that. Mrinal, just another sectoral trend. You mentioned that you've started putting some more money in technology. Can you elaborate on that? Are you looking at mid-caps, small caps, internet companies, regular IT services companies? What exactly do you have your eye on?
So, well, to begin with, I think the large cap IT companies have started looking interesting. The results for the quarter are out. We've had dormant results from almost most of them. A few of them actually took down the guidance for the year as well. But then the stocks have kind of retraced. So they are offering some interesting data points, entry points. So we would continue to nibble, and we've started just now. So that is of interest in particular. And the reason being, although there is a lot of talk about a potential US recession, but I think Fed is quite comfortably placed to deal with it if at all it happens. And I think a slowdown could potentially happen in 24, but then the seeds of next revolution in terms of technology, be it AI, be it IoT, drones, etc., is already in place. So, and these companies are very well placed to actually feed into that kind of investment that their clients would potentially do. So, from a medium to long-term perspective, I think the prices are interesting in the technology space, and the businesses are very, very capable with very high quality of cash conversions to profit.
Mrinal, we leave the conversation here for now. Thank you very much for joining in. By the